quit every single day until one day I was like, you know what? I'm just going to quit on the idea of quitting until it works out. And it did. After 12 months, it worked out. By the time I was 20 years old, I was making about $350,000 a year, and things were going well.
Hello, everyone. We're Jacqueline and Melvin Landry, and we welcome you to our podcast, Get Diversified. Throughout these series, we'll cover all the topics and questions you have about investing in apartment buildings, storage facilities, and mobile home parks. Being knowledgeable in these areas will help you feel more comfortable about investing. Apartment investing equals building wealth. Building wealth equals financial freedom. Achieving financial freedom allows you to spend your time with building memories with your loved ones. Let's face it, time is the one element in life that is limited, and you don't want to waste it.
Hello. Hey, good afternoon. My name is Melvin Landry, and we are here with our podcast, Get Diversified. And today we have our guest, Abbas Mohammed. Abbas is a mover and shaker in the real estate space, and I am here to interview and talk shop with you today. So, Abbas, great to be here, man. Good to see you again, brother. How you doing?
Thank you for having me, man. I'm excited.
All right, good. Hey, so Abbas, man, to kickstart off the podcast, tell us about your journey, a little bit about you, where you're from, and just kind of how you got, your real estate experience so far and where you're trying to get it to.
Let's do it, and feel free to pause me if I'm, going too long. But I was raised and born in Iraq, and I remember growing up, my family didn't have any money. We were very broke. In fact, I remember sleeping on concrete because we couldn't even afford to buy beds. And so we just, we didn't have a lot of money. And then after the Iraq war, we lost our house, moved over to Syria. And then from Syria, came to the U.S. when I was 11 years old. And this was back in 2009. And I remember at the time we were on food stamps. We were on housing assistance. I mean, you think of a welfare program, we've had it. Yeah. And I always remember hating that. Even as a kid, I would see all the other people didn't, need welfare programs, but we did. And so I remember as a kid, I was like, you know what? The minute I could change that, the minute I could work hard and change my family's financial situation, I'll work every single day, no matter what, until that happens. And so when I was 18, I was just selling used cars, and I was going to college, just going through the normal route. And I kind of realized early on that, look, if I want to change my family's financial future, I have to do something different. Going to college and making $50,000-$60,000 a year wasn't going to make that big of a difference. And so what I did at the time is I actually went out, and at the age of 18, I got my real estate license on a credit card because I couldn't even afford it. And I thought at the time, it was going to be super easy. I live in the Bay Area where houses are $1 million each. So I thought, look, I get my real estate license. I'm going to get one house sold a week. I'm going to make $30,000, $40,000 a week, and life is going to be good. But I was very, very wrong. In fact, it took me literally 12 months of cold calling every single day to get my first transaction. I wanted to quit every single day until one day I was like, you know what? I'm just going to quit on the idea of quitting until it works out. And it did. After 12 months, it worked out. By the time I was 20 years old, I was making about $350,000 a year, and things were going well. So then I started learning how to hire virtual assistants and systematize my business and all that stuff. But within about 4 years of being in business, I became top 50 with Remax. My business did close to $2 million a year, and in the last year I was operating it, and I had 25 virtual employees. And so things were doing really well. But then eventually I switched over to multifamily. But I'm going to pause right there so that way we could break that down if we need to.
Absolutely. Absolutely. So you talk about your single family journey, right? So the time frame, right? We're talking about very large amounts here that you amassed to. So tell the audience in terms of that amount of time, man, from you to kind of work up to get all these employees. What did I hear? $2 million in terms of single family real estate from a sales standpoint? How long did it take you to really ramp up very quickly?
Yeah, I mean, it was close to 2 million in profit, not in sales. I mean, in terms of sales, we were doing a lot more, but in terms of profit, we're doing close to 2 million. So the way I ramped it up is really by learning how to hire people and delegating. And so when I first started hiring, I was making about, like I said at the time, I was making about 350,000. And then I hired my first virtual assistant, then hired a second, then hired a third. And I realized every time I would hire someone, my business production would increase. And so when I was going to hire my fourth person, March 2020 hit, and obviously we all know what happened as COVID
Oh,
came.
yeah.
And so when COVID came in, I saw all these other businesses were downscaling. They were letting people go. They were firing their employees. They were reducing their marketing. So I looked at that and I'm like, you know what? This is crazy. All these big businesses are shrinking. This is the best time to expand. And so
Yeah.
I literally hired a hiring manager and I said, your job is to hire people nonstop, even if I tell you to stop. And so that's what she did. We went from 3 people to 12 people. I tripled my profits that year, went from 350 to like 750 that year.
Wow.
And then the following year, we went from 750 to 1.7 million in profit.
Okay.
And then afterwards, I started accumulating a lot of cash in the bank. In fact, I remember at some point I had about $1 million sitting in cash, and after I bought a house and all that stuff, and I'm like, okay, well, what do I do with this money? And that's when I decided to switch over to multifamily.
Okay, good. Now, you mentioned about, you had a business, COVID hit, right? I'm no stranger to that as well, right? I had a business franchise that also closed right before COVID, right? So we
Oh
had
wow.
we had similar journeys in terms of kind of shutting things down and kind of repivoting, if you will, to kind of garner the success that we were looking for. So here we're like right around COVID, right? You're still in the single family ecosystem, and then you decide to pivot, right? So
Yep.
at what point did that light bulb go off for Abbas?
Yeah. So what happened is, here's what I realized for me, and this is true for most people, is that our primary source of income is either a business that we operate or it's a job that we have.
Yeah.
And really, that's the only income we get for the most part. And if that income source was to go down, then we wouldn't really have any money to pay bills. And so I realized that, even though my business was doing really well and all that stuff, if that business was to ever go down, I would go down to point zero, just like I started when I was 18 years old, when I had nothing.
Yep.
And so I looked at the cash I had, and at the time I knew how to make money. I just didn't know what to invest it in. And one of the things I did know, though, is I knew I would not want to invest in single family houses, because
Mhm.
I sold single family houses and I saw how my clients were going through so much trouble
Yep.
to manage these assets, to renovate them, and they have all these issues that come up all the time. They have tenant evictions they have to deal with, and as much as people like to call it passive, it really is not as passive as
True.
people think it is. It's actually a lot more work than you might imagine. And so when I wanted to start investing, I wanted to build a second stream of income, to get cash flow, but I also wanted to reliably and safely double my money every few years over a long enough time horizon. I didn't care. You look at some other asset classes besides multifamily, like you look at crypto, you look at the stock market.
Yeah.
In some stocks and some cryptos that you could buy, you could get 30, 40, 50% returns a year, but you could also lose all your money.
That's true.
And to me, I wasn't interested in going, for a home run, but also having the chance of losing everything. I wanted something that I know for the next 10 years, 20, 30, 40 years is going to continuously go up in value, or at least have the highest chance of going up in value over a long enough time horizon. And so I knew I didn't want to do single family. I knew I didn't want to do stock market investments. I actually put in like 180,000 and then I lost 40 grand doing that. So that wasn't a good idea, but it is what it is. Crypto, I never touched. I've never been a believer in Bitcoin or Ethereum or any of this other stuff.
Okay.
And so then I looked at multifamily and everything made sense to me, because with multifamily, the nice thing is I could choose which markets I want to invest in.
Mhm.
And I'm very data oriented. One of the things I realized early on in real estate is that the markets that did the best were the markets that had the biggest population growth, meaning people moving in,
Mhm.
the markets that had the biggest job growth. Those markets really did well in real estate. And so the fact that when I invest in multifamily, I can choose markets not based on where I live, but based on the data and based on what's happening to these markets. So that was the first step. That was the biggest benefit. The second benefit is I could have on-site management. I could work with a third-party company to manage the asset, and they could do a much better job than single-family management companies could, because with single family, they're managing 300, 400 single family houses, and they don't have time to really dedicate to your one asset. Versus in multifamily, I might have 3 or 4 on-site employees of the property we buy. So that to me was the second benefit. But also, more than anything, it was the fact that I could get cash flow. I could get appreciation, and then the tax deductions were also another huge factor for me. So that's why I decided early on in 2021 that I was gonna start passively investing in multifamily, and so I went all in.
Gotcha. So, boss, so let's kind of think about this, right? So, single family, right? You had a journey, right? You progressed in, you got very successful. Then you realize, hey, there has to be a better way, right? Here is the boss is getting diversified, right? And then
That's
he's
right.
kind of moving forward to multifamily, right? And he's using analytics, using data, right? Using analysis to really pick and choose those primary markets for you and to be able to accelerate your growth in that respective standpoint. Fast forward to today, man. What it has grown for you. It has grown for you exponentially, right? In terms of proximity, individuals who know you, right? I got to know you through multifamily. You know,
That's right.
tell the learners kind of your trajectory, and you're cruising at a high altitude right now, and it's going fantastic for you. And I see you out there. So tell the learners kind of where we're at as of 2023, how the growth has happened for you. How's it looking?
Absolutely. So when I started, it was all passive investments, and one of the things I decided to focus on was, like I said, choosing the right market. For me, that was Dallas. So I invested passively. I put in about $600,000 passively, and so
Okay.
from then on, I was like, okay. One of the things I realized is a lot of my network wanted to also invest in these deals, and so I actually did my first deal as a general partner, where I would help other people invest in these deals with me. And so I bought my first deal in Dallas. It was 64 units in Dallas. Um, After we closed it, I bought another deal that was 30.5 million, also in Dallas. And those are with other people. So like I would put the property under contract, because we look at a lot of deals. I would put it under contract, and then
Yep.
we would bring in other investors with us that maybe had full-time jobs, maybe they had businesses, they were making good money, just like I was in my sales business before, but they just didn't have a time or a place to invest it into.
Mhm.
And so a lot of our investors tend to be, higher income earners, or maybe they've got a big stock portfolio and they just don't want to deal with the hassle of the ups and downs that happen all the time. So I did two deals, and then in 2022, my projection was I would do four deals, because I did two deals in 6 months. I'm like, okay, I'll be able to do four deals in 12 months the next year. But for the first 6 months, the market was way overpriced in 2022, so I
Mhm.
stayed out of the market, and it was painful at the time, because I'm
Yeah.
like, God, I see all these people doing deals, and
Deals. Yeah.
I'm not doing
Yeah.
anything.
Yeah.
But you got to stick to the numbers, and that's the thing I like about multifamily, is that if you look at the numbers and if you analyze things correctly, the numbers tell the entire story, and so you could keep emotions at the door. Um, so that's what I really like. But anyway, I stayed out of the market, and then in July of 2022, prices went down because interest rates had gone up. And by the way, if you're a real estate investor, I think interest rates going up was a gift from God, because it brought the market back to reality. And so
Yeah.
I'm actually glad interest rates have gone up, and I hope that they continue to go up, because now we're getting deals at prices that we would not have been able to get them at for many years. And so I'm glad that's happening right now, to be honest with you. But having said that, I bought another deal for 12.8 million. So now we're at $54 million in assets under management,
Mhm.
and my target is to get us to $1 billion with our investors in the next 5 years.
Yep, yep, yep. Good. That's fantastic, man. You mentioned the notion of you started off, you passively invested, right? When I got into multifamily, right, I started passively invested in deals.
Yep.
That allowed me, hey, to get educated, build my base of proximity of individuals, and enhance my learning. It's been fantastic ever since, from that standpoint. So,
You
boss, you
have
think?
to.
Oh, yeah, indeed, indeed. So, you think about in terms of where you started, in terms of to where you're at now. Hey, my name is Joseph, right? I don't make that much money, but man, I really want to get into real estate. What would you tell Joseph?
Do it. I mean, you've got to jump in at some point. A lot of times people stay hesitant because they don't know all the details, but you're not going to know all the details until you jump in. And so I would say, for me, when I first started, I knew a lot about real estate. I knew a lot about single family, but I didn't know anything about multifamily. But I learned because I started investing. I saw what other people were doing.
Yep.
I got myself educated. I'm very big on education, so I got myself educated as well. But you got to start. You got to jump in. You got to invest. I will say that there's nothing that doesn't have risks. So I'm not going to tell you, hey, it's going to work out every time as you expect. But I will say, in my opinion, the biggest risk is not doing anything. that will cost you a lot more in the long run than investing in a deal. And maybe you're afraid that it's not going to cash flow the way you think, or it's not going to appreciate the way you think. To me, I would rather get in, learn, and go from there than not do anything. So I would say just jump in and do it, and you'll find out, as you go along, what you want to adjust for future investments.
So the key message from Abbas here, guys, is sitting on the sidelines will not get you anywhere. So
One
at
hundred
the
percent.
very least, right? Get educated, right? Continue to build on your learning. Hey, I'm an educator myself, right? I'm a professor. I'm a sponge for continually to learn, right? Individuals who are doing it, like Abbas here. And, that's half the battle, right? Getting yourself educated and continue to grow and learn. So, Rome wasn't built in a day. And, but hey, it takes time, right? To build your network is your net worth, right? At the end of the day. So,
100%. You know what's interesting? So I read about Warren Buffett a lot because he's to me he's an icon in the investing world. But one of the interesting thing is, even as old as he is and as knowledgeable as he is and experienced, he still reads all the time. I mean, he spends many hours every day reading and educating himself on all these different things, because to him there's always more to learn. And so for people like us, we're not at Warren Buffett's level yet, education should not be underplayed, for sure.
yeah, education is the great equalizer. That's for sure.
100%.
Yeah. So, Boss, you live in San Jose, California. Am I correct?
I live in San Jose. I always tell people I really like living in San Jose. I would never invest in California at all, though.
Okay. You want to explain for the viewers why you would never invest in your own backyard? Go ahead.
Yeah, it's convenient, but you know what? Investing, and when you invest in real estate or any asset class for that matter, you have to choose it based on data. And one of the things I'll tell you is that in California, we've had negative population growth, we've had negative job growth. The state is very anti-landlord, and they're very pro-tenant, right? To a point where it's kind of ridiculous. I mean, it takes 9 months, 12 months to evict somebody that's not paying you any rent. And so, you want to choose places that have good population growth, good rent growth, solid jobs, solid appreciation, but also, in my opinion, most importantly, is they have to be landlord friendly. And so that takes out states like California, Oregon, Washington, and all these other states.
Yep. So makes sense. In terms of markets, man, I mean, you've invested in a few markets. I know Dallas is your bread and butter, right? Any other particular markets, Abbas, that view is favorable to you in terms from an investment standpoint?
Yeah, 100%. I really like Nashville. Nashville, I would say, is kind of my second favorite market. I like a lot of markets in Florida. I mean, think about Jacksonville, Tampa, Orlando. The only thing I kind of worry about there is obviously the natural disasters that may happen, right?
Yep.
The thing I like about Nashville is it's kind of steady and nothing really happens there for the most part.
Yep.
I like Tucson. I like Phoenix, although Phoenix, one of the things that worries me a little bit is what's going on with the water situation there. So you have to look at all of these different things, and that's why, to me, so far, Dallas has been my favorite, because it has the least amount of natural disasters. It has a lot of job growth, a lot of population growth. And so it's like, you really, in my opinion, you almost can't go wrong with Dallas.
Gotcha. Okay. Also, Boss, right? Say, for instance, right, there's someone out there, right? They're looking at this podcast, and like, man, Boss is killing it, right? Man, I really want to get started, man, but minimum investment I typically don't have. What are some other options you would provide in terms of recommendations of folks that they potentially could get started and possibly invest in the opportunity?
Yeah, what's interesting is, I've always told people this: the best investment you'll ever make is the investment in your education. So to me, that's number one.
Mm-hmm.
After education, if you have a business, invest in your business. And then at that point, if you have an excess in cash, then invest in real estate. And I think that's for the right formula. Invest in education, then your business, and then invest in real estate. However, a lot of us also have money sitting in retirement accounts. I don't have a retirement account because I've always been against it. But if you do, I would say, in my opinion, you might be better off putting that money out, taking it out of the stock market and putting it into real estate passively, because that money you can't really, pull out, because then you'd pay a penalty. So if you're going to do that anyway, you might as well just invest it in real estate so you don't have to pay the penalty. You could use your retirement account and passively invest without taking the money out and paying whatever penalty they charge you. But yeah, I mean, I would say, look, get started somehow, whether it's through a retirement account, through cash. 50,000 obviously is a lot of money, but if you think about it, inflation right now is sitting at 6.5%.
Yep.
And so it's
True.
like, how much money are you losing by not investing? That's the real question we got to ask ourselves.
Yep. Good, fantastic answer there, boss. Hey, also, you through your journey, right? You've been in a lot of kind of consortiums and groups and things of that nature, right? In terms of helping you matriculate along the way as you got diversified from single family to multifamily. If there's folks out there that's looking, thinking about investing in themselves from an education standpoint, what would you recommend to them from that standpoint?
Yeah, I mean, I would say start with the free stuff. There's a lot of free education online that you don't have to pay a single penny for. Start with the free stuff online on YouTube, on Google, Bigger Pockets, all these different websites. And then at some point, you're going to start to resonate with one group more than other groups. And at that point, then maybe you want to explore going further, whether it's going to their conferences, or maybe if they have, mentorship groups or mastermind groups or whatever, then you could go further into that. But I would say maybe it's not a good idea to just jump into, a paid kind of thing at first until you really understand if you even like that group or not to begin with, by just going through their free stuff. And really nowadays, a lot of times, if you're just looking to passively invest, you probably don't even need paid mentorship or paid courses or any of that stuff, because a lot of information is just out there for free.
I believe, Abbas, that every day there is a different group collaborating via Zoom, right? Talking about real estate, multifamily real estate, right? Market conditions,
Yep.
tax savings, tax opportunities. There is literally a Zoom event, and I check my calendar every day, 7 days a week. So the information is out there. It's,
Yep.
how you act upon it and how you kind of gain the learnings to kind of realize overall success.
100%. I mean, we host a weekly event every Tuesday, and it's
Yeah.
completely free as
Yeah.
well. But we have YouTube videos, we have blog articles, and I'm not the only one that does all this stuff. I know a lot of other people that do that stuff as well.
Okay. And for those who may be, hey, they may
You're
have,
doing a podcast, by the way, for free, teaching people about this, right?
that's what it's all about. Education, right? It's the great equalizer.
That's right.
And I have the man here who I'm talking to, and happy to have you kind of drop knowledge
Appreciate
to
it.
the user base, man. So someone is out there, they're involved in real estate, Abbas, right? They're moving slower than what they want to move, right? They want to get into multifamily, right? And they have the opportunity to join an ecosystem, right? Talk about the presence and the effectiveness of masterminds, if you don't mind, particularly in real estate space, right? Because I mean, hey, we're in one of the same mastermind groups as well. So if you
That's
want
right.
to speak to that for the user base, that'd be fantastic.
100%. So, it's interesting. When I was 18 years old and I got into business, one of the things I realized quickly is that as I wasn't the smartest guy in the world, and I didn't want to spend 50 years of my life trying to figure things out. So what I did, and I don't recommend this for anybody, but this is what I did,
Sure.
is I literally went out and I hired a coach on my credit card. At the time I had 5,000. It cost me $2,000 to get my license, and the coach was $1,000. So I hired a coach for $1,000. And that's how I ended up making 350,000. The year afterwards. It was because my coach really helped me, put me on the right trajectory.
Yeah.
When I wanted to learn how to speak in public, because I had a big fear of public speaking and hosting webinars, which I do now every week. I
Yeah,
speak
you do.
at different places every week. I went out and I paid a guy $25,000 who did public speaking for a living. And so anytime I want to learn something, I go pay somebody who's done it, because then I could take 50 years of experience and then just compress it into like 2 months or 3 months. When I want to learn how to do multifamily, I went out and found a group that did that, paid $50,000, learned how to do multifamily. And so eventually, what I realized is that I could take, like I said, decades of other people's experience, compress it, learn it, and then I could go apply and make a lot more money than the money I paid them. And so we actually recently started, a mastermind as well for those that are trying to get in on the GP side and learn how to buy deals, how to raise money, how to choose markets, how to build broker relationships. So we started that mastermind about a month ago. Or a month and a half. We're close to 20 people already, so that's been going pretty well as well, and it's growing very rapidly.
Yeah, fantastic mastermind, by the way. I'm a member, so I can attest to that as well.
I
So,
appreciate that.
yeah, indeed. Abbas, you threw out a couple of acronyms, right? So for other general learners, right, when you think GP, LP. You want to explain to them what does that mean from a
Yeah.
multifamily standpoint?
Absolutely. So in multifamily real estate, you have two types of people. You've got the GP, general partner, and you've got the LP, which is the limited partner. The GP's job is to basically, and that's people like myself, people like Melvin. Our job is to go find the right markets.
Yep.
We have to go build the broker relationships. We have to go find the deals, put our hard-earned money as a deposit at risk, and then if the deal pencils out and everything looks great for the investors, or we believe it's great, then at that point we send it out to the LPs, which are the limited partners, which are the investors that are trying to basically put their capital to use. And so at that point, investors have a certain amount of time to invest in the deal, fill out their information, and then they're on the ride basically. And so the target of any deal, really, from the GP standpoint, from our standpoint, is we want the passive investors to make cash flow, to get appreciation, and also get tax deductions. And so as a passive investor, you get to deploy your capital, and then the general partner, basically their main job is to make sure that your capital is put to good use in good assets and good markets that are appreciating in value.
A few points here that Abbas mentioned is critical: cash flow, tax savings, right? Appreciation, right? Being able to leverage that and leverage your position goes a long way when you think about opportunities, right? When it helps your overall net worth as well from that standpoint.
One thing I want to say is I think tax deductions in real estate are very understated. I remember when I first started investing in 2021, I ended up getting close to an $800,000 tax deduction, which got me a $256,000 refund from the IRS. Every year prior to that, I would write a big check to the IRS. That was the only year where the IRS wrote a big check to me.
So for everyone out there who, hopefully you heard this, Abbas got a pretty sizable refund to the point that it's probably more than a lot of incomes that folks bring in on a 12-month basis. So what is that telling you, right? If you're thinking about getting started, if you want to get educated, take action, right? If you want to get a mentor, right? Abbas has done that on single family as well as multifamily front. I did the same. I got a mentor when I started approximately 11 years ago, right, in single family front, because I wasn't moving fast enough. And I bought my first single family property in 2005.
Wow.
Fast forward to 2023. I'm passively invested in almost 2,500 doors, right?
Wow.
Got a mentor, took action, got my spouse on board, and we've been sprinting down the tracks ever since. So here's a testament here. I have a boss here that kind of speaking the truth. Guy's doing fantastic, and sky's the limit. And oh, by the way, Abbas, you don't mind sharing with the group, I believe you're half my age. How old are you, sir?
I'm trying to go with the beard so nobody notices anymore. But I'm 25. But I just got started early. I got started early in the game.
Yeah. Wow. Almost double your age, man. But hey, never too old. You're never too young to take
That's
action
right.
from that standpoint.
That's right. There's people all across the spectrum. I see people investing in multifamily when they're in their 60s, 70s, even 80s. And obviously there's people as young as I am or even younger that are in multifamily. So it's all over, really. I think one good thing that we've realized is that, the stock market is not the way to go, because real estate has been. I mean, you look at, for example, especially right now during inflationary periods like we've got right now. You look at the 1970s. That's when real estate did the best, because while the dollar value is going down, asset prices have historically gone up because they can't print more. They can't print more real estate. They could print more dollars, and that inflates the dollar, reduces the dollar value. But because of that, it inflates the asset prices. And so real estate has done very, very well historically during inflationary times like this, versus like you look at the stock market, it's gotten hammered. And so I'm glad we found real estate. I'm glad we found multifamily specifically, and I'll just continue investing in that.
So you would say, Abbas, over your trajectory of your very kind of long career, right? You're 27. You've gotten diversified, right? You've taken action. You've gotten education. You got a mentor, and you surround yourself with individuals from a proximity standpoint to enhance your growth and realize your net worth, which is flying off the charts and is continually to grow. Correct?
100%. It's interesting. The the more groups I hang out with where there are other people in there that make more money, the more I realize I need to do even more. Like, for example, I was in this mastermind where this guy, he sold his company to Berkshire Hathaway, to Warren Buffett, for $8 billion. And he was making his company was generating, I think he said $500 million of revenue per year by the time he was 30 years old. So it's everything is in perspective, right? So some people might look at what I did and they're like, hey, you know what? This is very far from where I'm at. But I look at other people that I have done way more, and I think the same way. But the most important thing is whatever point you're starting from, you just got to get started. You just got to get in the game and you got to do something. And the earlier you start, the better off you're going to be. Because if you think about it, you have to think not in the terms of 1 year, 2 years, 3 years, but in terms of a decade, 2 decades, 3 decades from now, where things are going to be.
Legacy wealth. Legacy wealth. That's what it's all
100%.
about.
100%. And historically, real estate has been one of the very few asset classes out there that has done very, very well over a long period of time. Like if you think about 2008, for example, everybody is worried about a crash or recession. By the way, this is the best time, in my opinion, to invest because
Totally agree.
other people are sitting on the sidelines. But you've got 2008, for example, the market dipped, but the market went way past 2008 by now. And so if you hold on to an asset long enough, the market will take care of you. And I heard another syndicator say this term. He says, time in the market is better spent than time sitting outside of the market. And I fully, fully agree. I would rather be all in and benefit from, the ups and downs than to just sit on the sideline waiting to time the market. But then when the market goes down, everybody jumps in and then the market goes way up and you miss the boat again. You know what I mean? So I would say, given that we've got huge discounts in real estate, huge discounts in multifamily, than 2021 and 2022 pricing, in my opinion, there's no reason not to be getting all in right now.
So, Abbas, you've truly spoke to the notion of persistence, right? Don't give up. Keep going. Get off the
Love it.
sidelines. Take action. Man,
100%.
It's been a fantastic interview, Abbas. Man, I will close this thing out with one more question for you, man, as we kind of come here near to the end.
Let's do it.
What's the best piece of advice anyone has ever gave you? Go ahead. Think about that.
Man, yeah, that's a good question. Think bigger. I always used to think that I was thinking very big, like, oh, I want to get to $1 billion in 5 years in assets and all these different things. But then the more I hang out, like I said, with other people that have done way more than I have done, the more I realize I'm thinking too small. I thought 10x was, for example, big. I met this guy at this other mastermind where he's like, listen, if I was thinking 10x, my business would be tiny by now. You have to be thinking 100x, 1000x, and think much, much larger than you ever thought was possible. And I'm like, God, what am I doing with my life? I gotta think even bigger. So I think, I constantly catch myself thinking too small, and it's all relative, obviously, right?
Mm-hmm.
But at the end of the day, we could all do more. We could all take more action. We could all think bigger and plan to do bigger things. So 10xing, 100xing, 1000xing really is what we need to be thinking about.
Yeah, that's funny that you mentioned that, Abbas. For you, right? You want to have ownership of $1 billion of real estate, under management. For me, starting out, it was, the target tried to be passively invested in $1 billion worth of real estate. And as I'm kind of thinking about this and determining how I'm diversifying, I could get there by the end of the year. It's not that hard.
100%.
Not that hard.
100%.
So it's time to kind of double up, really take charge in action, and that's half the battle there. So
let's do that.
Let's
do that. It's a lot more fun to be working on large goals than it is to be working on small goals.
Indeed, absolutely, right? Because it tangles at first, right? In terms of, oh boy, can I get there? But once you get the momentum, right, you take action. It's just like, man, right. This really is achievable. I'm not kind of seeing that
100%. But if you're just getting started, don't let this stuff overwhelm you, right? All these numbers, all that stuff, just get in, right? Do something. And then afterwards, you could always adjust what your goals are, what your expectations are, but you just got to get started with something. Like I said, when I first got started in real estate, it took me 12 months to get one transaction. It was difficult, took a long time. Imagine if I would have quit because I didn't understand how to do it correctly. If I would have quit, I would have gone back to college. I would have now been working for somebody else making $50,000, $60,000 a year, and my life would be completely different. So I would say, if you don't know what you're doing, it doesn't matter. Get yourself educated, figure it out. Nobody was born into this world knowing about multifamily and real estate and how to invest and all these other things, right? So you just got to learn and take action, and you'll learn as you go along. You're never going to have all the information you need to take action.
Cool. Appreciate you saying that. Well, Abbas, hey, we've come to the close of the podcast. We appreciate it fully. Obviously, Abbas is getting diversified, right? I'm continually getting diversified. And hey, take action. Sky's the limit. I mean, truly a testament in terms of where you started, your midpoint, and where you're going. And you're rolling down the track right now. You're doing some fantastic things, and you're impacting a lot of lives, man.
Appreciate it, man. Thank you.
Man, on behalf of myself, my wife Jacqueline, and the More Land Equity team, hey, we appreciate you, brother. Thanks so much.
I appreciate you. Thank you so much.
All right, you got it.
Jacqueline and Melvin, thank you so much for taking time out of your busy day to listen to this episode of Get Diversified. Please make sure to subscribe to our podcast so you don't miss out on future episodes. Finally, stop by our website and follow us on social media. Ciao for now. Make it a great day, and we'll see you next time. And remember, get diversified.